At the time of the recording of this podcast, and according to the ADMP Awards websites, Bitcoin and its DeFi ecosystem are bracing themselves for either a light touch from the US crypto regulator in the US Congress in the coming days as of the 9th of August 2021, or we could also expect also a rather hard touch that could go as far as impacting blockchain open source coders via the Warner Amendment that will make them brokers and therefore subjected to inland revenue tax form filling, IRS, right? That could kick out of the crypto ecosystem an important number of open source digital makers, coders, miners, developers who got involved in the space out of passion in the first place, and therefore not to feel tax form. As they say, players gonna play, haters gonna hate, we guess. Today, the Bitcoin price was exactly $46,265, up from $31,000.695.97 as per the last podcast. Satoshi's Corner, Season 1, Episode 11.
My name is Herman Jumesi, social media, blockchain, and big data consultant. This podcast is a bite-sized summary of a potential conversation with Satoshi Nakamoto seminal white paper, Bitcoin, a peer-to-peer electronic cash system. The goal of this podcast is to establish the many sources and resources necessary to create, deploy, and optimize blockchain technology ecosystem in order to establish a Bitcoin or blockchain standard for businesses and organizations in the 21st century.
Today's program is the last of Season 1. We will jump into Season 2 in the coming weeks, so stay tuned to your RSS feed, whether it is on Spreaker, Podbean, Deezer, YouTube, or our current newsletter, ADMP Incubator on Substack. We also have a Discord, of course, and ADMP on Discord is hashtag MetaBarons, METABARONS. You will have all the links available in the description of this podcast, which has had since its digital inception roughly a year ago. A lot of downloads, close to 100 so far via our newsletter, and about to reach the 3,000 downloads milestone by the end of the season on Spreaker alone. You are awesome. Simply the best, and still listening to the goats of all crypto casts. Thank you again for your resilience, courage, and indefatigability. Alright, enough compliment now. Big man thing. The program of today's Satoshi's Corner Season 1, Episode 11, will be definitely lit. We will have another reading of the Satoshi white paper and a sentiment analysis of its impact on the crypto space via cutting-edge crypto blogs reading 2. We will have a surprise guest just for you as a present for the last episode of the season. An interview with a mysterious Harvard grad, lecturer in Nigeria, and crypto lawyer extraordinaire, author of a book that we will definitely discover together. Right, our favorite time, the Satoshi white paper reading, as per the protocol, of course. We've already seen the intro forwards. Remember, a peer-to-peer version of electronic cash will allow an online payment to be sent directly from one party to another without going through a single financial institution. Okay, you get it. All right, that was in 1, and then in 2 we have transaction. In 3 we have timestamp server. In 4 we have proof of work, and now on 5, of course, we're gonna have network. This is how the network runs. Let's read the paper, please. Network. The steps to run the network are as follows. Transactions are broadcast to all nodes. Number 2, each node collects new transactions into a block. Each node, alright. Number 3, each node works on finding a difficult proof of work for its block. Okay, each node again. Number 4, when a node finds a proof of work, it broadcasts the block to all nodes. Number 5, nodes accept the block only if all transactions in it are valid and not already spent. So there was a verification process there. Number 6, nodes express their acceptance of the block by working on creating the next block in the chain using the hash of the accepted block as the previous hash. So proof of history. Node, of course, always consider the longest chain to be the correct one and will keep working on extending it, right? Which is why 51% attacks will always require you to do a longer chain than the previous chain if you want to take over a network, right? If you want to take over, of course, as an attack. If two nodes broadcast different versions of the next block simultaneously or at the same time, some nodes may receive one or the other first. In that case, they work on the first one they received, but save the other branch in case it becomes longer. So nodes obviously have memory. The tie, of course, will be broken when the next proof of work is found and one branch becomes longer. The nodes that were working on the other branch will then switch to the longer one. Okay? So you can have nodes actually working on competing branch, but at some point they'll switch back to the longer one. All right? This is why it is such a system fit for the 21st century, especially once we're going to start talking about validating data entering a system. This is extremely important, even for some of the current crises that we're going through right now. Think about the sanitary crisis that we're experiencing right now. How do you make sure that the data that we are actually watching and using are valid? They have not been vetted by a network. That's a problem. Those data have to be validated by a network. Only blockchain technology offers that possibility. Let's go back. New transaction broadcasts do not necessarily need to reach all nodes. As long as they reach many nodes, they will get into a block before long. Block broadcasts are also tolerant of dropped messages. Somebody can start a transaction and then stop the transaction halfway through and say, oh, I don't want to do it. If a node does not receive a block, it will request it when it receives the next block and realizes it missed one, and then go back to the longest chain. All right. So that's why you're going to hear that concept of blockchain as a referee, especially to validate data. As soon as you have data validation, now you can set up machine learning process. Then you can now create analytics, predictive analytics, descriptive analytics, among others. Introduce that notion of AI and artificial intelligence. This is fantastic. All right, we stop there because that's where the paper stops. Next time we will be reading, of course, part 6 of the Satoshi white paper that we keep exploring at our leisurely pace. We want to understand the thing. That's what we're trying to do here. Pose. Let's have a look at what is a node once again. We did in previous episodes, right? So please go back to episode 4 and 5, I think, 4, 5, 6. But we don't mind revisiting key notions and concepts behind new blockchain deployments, by the way. Proof of work versus proof of stake will be a debate raging between your team of developers and business developers for ages. The decision will impact the network and the type of nodes you are looking to deploy or indeed use, especially in the case of interoperable blockchain. First, what is a network node? So we went to this blog, lifewire.com, 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 under the title, What is a Node? We won't read it aloud because we want to keep this CryptoCast short and sweet, but definitely I do invite you to go and have a look there for yourself. And then there is another article that we've put together for you, what is actually a blockchain node, right? So first of all, it's what is a network, computer network node, and then of course now we're looking at what is a blockchain node, and that's on https 101blockchains.com/blockchain nodes, right? 101blockchains.com, that's the name of the website, and then you're looking for the page that is called blockchain nodes, right? And it will actually explain you everything there you need to know about a blockchain node. Now, there is another one that we do invite you to have a look at, which is https btcmanager.com, btcmanager.com, all in one word, right? And the page that you're looking for is the long history of the fight over scaling Bitcoin. All right, so please have a look at that, because of course, once we start looking at the network, we're going to look at the key features of any blockchain ecosystem or network. So as far as the Bitcoin is concerned, the nodes on the network have to solve game theory puzzles in order to validate a transaction, which of course contributes to the heating that you've seen in Bitcoin mining farms. Huge amount of energy that is requested and required to fuel Bitcoin mining farm. Then of course you have the pure network effects, which means that you need a majority of nodes to agree on the validity of the transaction that you, the single node, have just validated. So the entire network has to agree. At least 51% of that network, at least, that's the minimum. Okay? Now, another feature of network that you could call also, that would be part of the network effect, if you want, as far as the Bitcoin network is concerned, is the resilience to the 51% attacks for all blockchain ecosystem. Why is that? Well, what you need to do in order to attack a Bitcoin network, you need to create a chain that is longer than the chain that is being actually deemed as the number one chain or the primary chain, right? You have to create a longer chain, the secondary chain that is longer than the primary one. And you need to have 51% of the nodes to agree that your chain is indeed the longest one. So that's a very important feature that, of course, any altcoins that do not use a critical amount of nodes and do not have, I repeat again, do not have proof of work, those networks are extremely susceptible to 51% attacks. And by the way, they are happening all the time in the altcoins world. So this is something that has been missed and lost from a lot of the crypto enthusiasts who buy into those crypto assets. And we want people to really pay attention to that, to really pay attention to the fundamentals of what a good blockchain is. Otherwise, I'm afraid a lot of you might be getting scammed. Right, so be careful out there, okay? I'm not naming names, I'm not pointing the fingers at anybody. I'm just saying to all of you trying to learn about the ecosystem, you have to be extremely careful, right? You can put in the comments if you want me to double check one of the altcoins you've bought. I do that a lot via the Discord group on Meta Barons. I know people keep asking me, what do you think of that currency, that one. All right, so I just do, a quick kind of technical overview of the whole thing. I don't know really, you can't really talk about the tokenomics behind the release of the token, but at least technically you can look at it and say, all right, this looks technically above board, and you can look at the governance, of course, and you can say, okay, this governance is actually above board too, right? And then, of course, you can ask me about the proof of community and proof of culture also, because I think those are important, because if you don't have an ecosystem and an info system supporting your effort, you're very susceptible to anybody sending out a tweet and just destroying the entire ecosystem. Or it could be a tweet or a regulatory oversight, like it's happening with these Warren amendments right now in the US Congress. And what is important to understand is Bitcoin has been classified as a commodity, like water, like potato, like banana, right? It's a commodity, whereas most of the altcoins will be classified as securities because they do not use proof of work, right? And because they have centralized governance. Okay, so that's extremely important to understand. All right, although I would say technically Ethereum could escape from that because Ethereum is used at the same time as a security. The early investor in Ethereum bought Ethereum in order to securitize the startup, right? The Ethereum startup. But then there is also the Ethereum Foundation, which is probably much more in charge of what is happening around the gas system. What? The gas system is when you actually use Ethereum token in order manage better your smart contracts. The smart contract that you're about to create. That smart contract could be a token, could be anything. The smart contract needs to have some Ethereum, spent on it, which is called gas. So therefore, Ethereum could escape. It's definitely in that gray area because it's doing two things at the same time. But I would say most of the other altcoins will probably pass as securities, which makes sense in many ways, but it's a bit sad. We want to see the ecosystem thrive, and of course, the least regulation is better, but you need some regulation to avoid a scam too. So it's always a fine balance to strike when you're trying to assess those ecosystems and to regulate them at some point, because they have to be regulated at some point, of course. So yeah, it's complex. In the 21st century, we've seen the Satoshi vision as per the Satoshi protocol reach out all the way to the commodity market and therefore escaping the old school, classical, orthodox financial markets and regulators. So for anyone to come in and, if you want, take the option of not following the principle and fundamentals of the Satoshi protocol, you will, by definition, then fall prey to old school regulators and financial markets. So the decentralized aspect or the DeFi aspect of the Satoshi original vision as per the Satoshi protocol is an important one to respect, because as you read the protocol, you will actually realize that the people who wrote the protocol had a very good understanding of how current financial markets and regulators actually operate in the real world. Beware of that whenever you want to offer an app, a wallet, a token, an exchange to the world that doesn't respect, if you want, the ethos and fundamentals of the Satoshi protocol. That is to say, the blockchain has to be, first and foremost, decentralized and offer peer-to-peer solution. We're not here to criticize. What we're trying to say really is the following point. Exchanges will become, and are very likely to become, the second or third layer of the Bitcoin or crypto ecosystem. But for that, they have to be, by definition, decentralized. They have to mirror, okay? The more they mirror the prime layer, then the more we go back to the fundamental of the prime layer. Meaning that exchanges, of course, have to be peer-to-peer. They have to be decentralized by nature. If they are decentralized by nature, then you are just a legal entity that is providing a service to a community over which you have very little influence. And therefore, you cannot be considered as an asset belonging to the old school ecosystem. That's very important to understand that second and third layers will be probably built by crypto exchanges as long as they become peer-to-peer by design, and as long as they mimic and copy the essence and the fundamentals of the Bitcoin ecosystem. one that will make incredible debates. I'm still waiting for you guys to comment about that, ask me questions about that. We can have debate about it. If you want me to do a podcast about it, I'll do a podcast about it. Clearly dominate the knowledge in that field anyway, so I'm not really, there's nothing that really can scare me. Okay, so please, just add your comments. Share that content to a maximum amount of people, of course. That's your duty here. That's my duty. And I hope you do that out of your passion for the technology. It's extremely important that you do comment also around this podcast, or just keep downloading it like you've done so far, and that's perfect too, in my books. Okay? Well, first question I'm going to ask you just quickly, as far as you can tell us, what's your name and what you do and so on and so forth. Yeah.
So my name is Pascaline Mélinon, and I'm an attorney. I practice corporate law.
All right.
And cryptocurrency law. I'm based in Paris.
Okay.
And I've been practicing for 5 years now.
Okay, excellent. Fantastic. Thank you very much. How did you get into the crypto thing?
Probably 10 years ago,
All right.
I came across this on the internet, and first I didn't take it seriously because Bitcoin was limited to the gaming world, and I'm not that into gaming, so it didn't resonate with me. But when I came across Satoshi white paper, then I understood the aims and objectives of cryptocurrency and Bitcoin as the way it was created.
All right. Okay. Fantastic. Where does the African angle comes into it now?
Because cryptocurrency was designed by Satoshi to help the unbanked to access alternative means of payment, and the way the banking system is set up is not made in a way to help the unbanked. So the idea for me when I came across the cryptocurrency and how it linked it to Africa is because for me I see cryptocurrency as a means of payment, and as a means of payment basically. The first objective of cryptocurrency, as the way I understand it, is a means of payment. So it makes
digital cash.
For me. Sorry?
Digital cash, basically.
Digital cash, yes.
Yeah.
Yes. But it was more than that, though. It was more than just digital cash. It was digital cash that was decentralized.
All right. Yes, you're right.
And with people's interest at the heart of the system, which was a revolution in itself, because the banking system is not made by the people and for the people, essentially. So I find it very democratic the way Bitcoin was imagined.
All right. The key perception for you was the fact that it would be well, first of all, as you say, an idea of creating some digital cash system, but also the fact that it is decentralized, right? But also the fact that it kind of connects people from peer to peer without going to some sort of a third party or a central organization or some sort of clearinghouse, right? So those are the kind of the three key features that got you into really deciding, okay, this is why I'm going to spend time on these things.
It was primarily the political aspect of cryptocurrency, not the financial aspect. Because there is a political motive behind having a decentralized cryptocurrency, and the political motive is to bring the power back to the people who use currency as a means of payment. That can be currency as in a digital format or in a tangible format. Regardless of the format, the idea is to empower the people back, and cryptocurrency does it or seeks to do it.
So those are the premise. So there was a political aspect. And then what about the technology? Were you seduced by the technology? Did you understand it at first? I mean, come on, it must be mind-boggling at some point.
First, I have to be honest, so I was clueless about the technology. I'm into law, I'm not into IT, so what I do on a regular basis is related to legislation. It's not related to IT or computer, so it was very foreign to me. Although I had an interest into the area, but to understand first what a CPU was, I had to smash my head and make some research in order to understand what are they talking about. But it's like when you look at an email address. I mean, do you really need to know how an email address works in order to appreciate the good it does for you? No, you really don't. So eventually, when I looked at what cryptocurrency and your different crypto wallet you may have and how you can send money from wallet to wallet in a very fast way, with very little fee. At the time, there were very little fees. I found it fascinating. So really, for me, I compare this to an email address, and I think that one day we all have a crypto wallet someday.
Definitely.
And be able to exchange digital assets.
So that's very interesting. I mean, on the front of what you're saying about the email is perfect, right? The internet works with dozens of protocols, and none of us is none the wiser as to how it works really and truly. Tiny minority of the world population that actually could explain you exactly how the internet works. But we all use it and we don't mind, and we're all experts in it, so it doesn't really make any problem, right? So that's really how we'll have to look at it for the Bitcoin too. You're right. We have to take the approach that at some point there will be technological layers that will enable you to understand it as easy as sending out an email, right? So that's what will happen ultimately. But then how do you apply that idea now to a continent that has a very little amount of energy, doesn't have a lot of political stability, doesn't have a lot of, money, but has an amazing, the youngest population in the world, of course, that has almost all the natural resources in the world that you can be looking for, whether you're talking about oil or coltan or whatever. You got everything in Africa, but there are local issues that prevent people from actually being able to use it. And in some part of Africa too, they don't have currencies, right? They don't have their own currency. Their currency is being printed elsewhere. So, which is a very weird system. So when you have all of that, how do you apply that interesting idea of the Bitcoin and cryptocurrency, and how do you apply that in Africa now? In a place that shouldn't be the right place to start, maybe, I don't know.
Well, I'd say this is the exact perfect place to start. I think the initiative should come from the people. Cryptocurrency will work only if people embrace the technology. And actually, this is what is happening. Nigerian people didn't wait for the Nigerian government to promote cryptocurrency. The youth actually went on board and used it. So I think we don't, well, I have to say, on one hand, it's a shame that the government did not promote cryptocurrency as, let's say, Switzerland did, with the aim of having a crypto-friendly nation and be recognized as such. But the youth, or African youth, is using cryptocurrency in the way that it is inevitable that it will become mainstream in Africa. Mm. So it is the perfect place to have this technology. It is, and it's already being used.
All right, so you saying that this is the perfect place to start this sort of technology because it's a fresh terrain, or because there is a lot of young people?
Everything to be made there. Everything can be started from scratch. So you don't have external influences that can teach or that dictate how things should be done. It's a virgin territory almost, so it's a huge opportunity to build everything from scratch and to build something that is solid and will last in time. So I think it's much harder in countries such as countries located in Europe or in America, when you have very cumbersome processes that slows the acceptance of a new technology, whereas where you are in an environment that is fresh, free from all those interference and obstacles, I believe it is the perfect opportunity to build something that will resonate with the people of this environment, but will also be created for the people of this environment. So to me, I think it's a great opportunity that should be used and not missed.
Right, because I remember, when was it? Talking about Nigeria, I looked at when you look at the data, they said, how common is crypto? And they ask, how many of you in Nigeria can say that you've actually used crypto lately? And Nigeria was one of the highest ranking country in the world, right? I think, well, I have the data in front of me. I had Nigeria 32%, Vietnam 21%, Philippines 20%, Turkey, Peru, Switzerland, and the US was around 6%. So Nigeria had more people than the United States of America. So we're getting numbers in of usage in Africa that kind of are impressive. Well, have you looked at Nigeria yourself?
Yes. They drive the use of cryptocurrency. cryptocurrency, and that's very encouraging. They resort to cryptocurrency because they have been disappointed by the local banking system as well.
Yeah.
And the national currency is suffering from external influences, whereby the prices of naira can go up and down in a very unpredictable manner. So the youth has resorted to a more stable asset that can represent value and or money.
Right. So, okay, that's true. Sometimes the price on the ground in Nigeria is actually higher than the global Bitcoin price as well. Let's say if Bitcoin is $30,000 on the global market, in Nigeria it will be $60,000, right? Almost double the price sometimes.
You had the same situation in Turkey, but it's a matter of prices of Bitcoin were higher than the average price in the world in the world market. So it's a really matter of offer and demand. If you have more demand than offer, then the price will increase. So this local distortion are explained because of that. But I would assume if Nigerian would go on different exchanges or would turn to different type of offer, they would have obtained Bitcoin for the price I would obtain. So depends on the provider, I'd say.
Oh, well, I got to drop a few of those providers. Maybe you know them, some of them. Have you heard about Paxful or
I have, yes.
Yeah, CoinCola?
Yes, I
All right, okay. So so those companies kind of they operate in Nigeria, but they will give you the global price. I mean, I'm just saying that if there are people from Nigeria listening to the podcast one day, at least they should go there if they want, to still enjoy the global price, because obviously now it's creating a problem. So how will Bitcoin save Africa then? I mean, how is it going to save Africa? I don't know.
I have to say something about the global price, though. The price of the Bitcoin you have on the exchange really depends on the user of the exchange. So if you have a limited amount of offer on the given exchange, then you will have a particular price on this exchange. Whereas if you go on another exchange where you have more offer than demand, then obviously the price will be lower than the previous exchange. So that was really my point. I was not arguing as to whether they are not offering the global price, but really if you are on a crypto exchange, then this is where offer and demand have a real impact on the price of the digital asset you acquire on them.
Right. I totally agree with you on that. And I would add that for me, the real manipulation should happen when it's whether you offer a fiat getaway or not, right? If you are offering to change the money back into nairas or into dollars, and that's usually where the markup happens, right? It's because that person is offering you, fiat. And then usually people don't mind paying the markup because they're getting fiat, because they know they're going to be able to use it, right there. As soon as they leave the shop, they're going to be able to do something with it because of that. They actually have a better currency, right? they have the better currency, but then they go back to the old one.
Well, bad habits die hard.
Yeah, bad habit die hard, exactly. So that's the problem. So that's Nigeria. So what about, do you know any kind of other situation, I don't know, in Maghreb or in I don't know, or maybe down South Africa or Kenya or even, I don't know, Cameroon or something?
Well, North Africa is very particular because most of Northern African countries are Muslim countries. So there has been a discussion as to whether Bitcoin was complying with Sharia law.
Right.
For instance, there has been a huge debate among scholars as to whether they should allow it, not allow it, and if so, to what extent. They seem to be, from my understanding, but then again, I don't speak on behalf of Northern African, but it seems to be that they are being very cautious as to what stand to take with regards to cryptocurrencies. So they're more like, we should wait and see if it harms our economy or if it will be beneficial. But so far, they don't take a position as to say we ban cryptocurrency, but they will not go as far as to say we welcome cryptocurrency. So we kind of in a no man's land with regards to Northern Africa in general. So they haven't taken a stand yet.
Yeah, definitely. And I know for a fact, because I've been in contact with them, I know for a fact a lot of blockchain developers in Algeria. So they're actually working on it. I know they're working on it, so that's very important because there are other aspects, beyond Bitcoin, of course, than just cryptocurrencies. When you look at blockchain deployment, and even if you study the Bitcoin deployment, of course, it's one very important factor is data validation and of course identification, right? ID for voting, ID for just general ID, general identification. Right, so that's going to be a very big use case for the blockchain technology. That's definitely going to drive adoption further. I don't think you've answered the question, but I'm going to ask it again. But how will Bitcoin save Africa? I don't really see how it's going to save Africa. If indeed it's going to save Africa, I don't know. What do you think?
African are going to save Africa.
Yeah. Okay. Got it. Yeah. Okay. What's going to be the best tool for that?
Electronic data is going to save Africa. So only if you have the vision to develop the continent, that will occur. Money is obviously, for me, a way to enhance and increase the economic development. And digital currency, the way it has been conceptualized by Satoshi, is a very interesting alternative for the African financial market and the real economy. So I'm not going as far as to say cryptocurrency will save Africa. First, the people save themselves. That's one thing. But the way to do it is obviously through money. It's obviously through money. And you have to think as to how you want money to be a tool for your empowerment.
Right.
And cryptocurrency, to me, is one tool of empowerment, not the only one.
Fantastic.
So,
all right. Yeah, you're going to have to finance your development anyway. So how do you finance that development? You're going to need money. Makes sense. Right. So, but what are you suggesting? Are you suggesting people should use Bitcoin as a means towards development, or maybe should people imitate what Bitcoin has done as a means to development? Or should they create their own Africa coin? Or
No, well, even Bitcoin as it was has been enhanced in a way.
Yeah.
So that being said, Bitcoin is a very interesting bottom line to start with. So of course, I think there will be an African way to understand cryptocurrency, as there is a Chinese way to understand cryptocurrency.
Yeah, that is true.
And there is an American way. I am convinced that there will be an African way. The question is when, and I hope as soon as possible, in order to benefit from the advantages of this technology. Yes.
Okay. So you're not sure whether, in order to create your own Bitcoin, you will need to buy Bitcoin anyway. So one way or another, you're going to have contact with Bitcoin, right? You're going to have to be in contact with Bitcoin. If you want to create your own Bitcoin, you need to understand how Bitcoin works. So in order to understand how Bitcoin works, you need to have Bitcoins, right? If you don't have Bitcoins, you can't understand how it works, right? Simple as that. So you buy in, and then you get the thing, and then you start, your education process starts, right? But then at some point, I don't know, in 10 years time, 20 years time, let's say you master Bitcoin, shouldn't you create your own Cameroonian coin or Nigeria coin or no, you know what I call it nowadays, the CBDC, central bank digital currencies.
CBDC is a bit different. CBDC has been designed by central banks for central banks, and I think that at some point you'll have private investor being able to purchase CBDC, and it is being used for debt settlement. So the difference between CBDC and Bitcoin is that Bitcoin is for the regular people on the street, like you and I, and you do regular thing with regular purchase with this type of cryptocurrency. If you go to CBDC, they've copied the concept of the blockchain, but for the purpose of and the need of central banks.
Right.
So the aims and objectives of CBDC are completely different, even if they are based on the same technology or the same principle.
Right.
They fulfill a very different purpose. So yes, in a way, perhaps African central banks will resort to CBDC, but then again, that will be their own one and perhaps there will be a global market for CBDC.
Of course,
American,
yeah.
European,
Yeah.
that they will replace European funds or whatever they buy on the stock market. So, but they're really different in their purposes.
Yeah. Okay. So yeah, I think so. I think it would make sense that African countries will create their own CBDC. But as anybody else, they will need use case, and the best use case is Bitcoin. I mean, regardless of how you look at it, you will always go back to to the tree. The prime reason for the interview was, of course, your book. But if you can remind us what sort of legal advice you give out to people when it comes to the blockchain technology, what sort of exact legal advice do you normally give out?
Okay, with regards to cryptocurrency,
with regard to crypto, of course, with regard to crypto.
You have two types of activity. If I have in my practice, I came across different types of clients. You have the individual who wants to purchase cryptocurrency. You have the company who wants to develop a business based on the blockchain, and then you have all the litigation aspects regarding the blockchain and cryptocurrency. So I think your question is, what is my advice for someone who is unfamiliar with cryptocurrency, how they go about, what are the scams to avoid, and so on and so forth.
Yeah.
So I've talked about that in the book, but what I would say is educate yourself first of all before you purchase anything. That's the basic common knowledge I would require one to have.
Right.
And then once you have the issue of Africa, I mean, I have a lot of European clients that have been scammed on the internet because they're not familiar with the vocabulary of cryptocurrency. They're not familiar with mandatory information you need to find on the website, but that would be any kind of website. You would expect to find the name of the director, the name of the address of the company, the registered number. So that would be basic information that you would at least look when you search anything on the web. This information are even more important with regards to cryptocurrency because you have a lot of scammers. You have financial authority in your country that you can look up to. They can give you information if the website has been blacklisted or not. That would be your first checkpoint. And then if you want to buy cryptocurrency from someone on the street, I would highly not recommend it. I would go myself, if I were to start cryptocurrency now and I knew nothing, I would go on a regulated exchange. I think that would be the safest. Also, we have a global debate about Binance now, which is one thing, so I won't discuss the topic of Binance, but you would have regulated exchanges like Coinbase or Kraken in Europe or Bittrex. They have a license to provide people with crypto assets.
Right.
So I would say look for those crypto exchanges and ensure that they have the license or the authority or the authorization to provide you with crypto assets. That would be the main advice I would give out. And then of course either you go to a lawyer that knows about cryptocurrency, that can look before you make any type of investment if the investment is safe, if the website is legit, and do the whole due diligence on your behalf if you're unable to do it for yourself. But that would be my main advice.
Right, great. Wow, fantastic. Right, that's priceless. And I know that. So thank you very much. That's I will definitely recommend your work. I mean, you've said exactly what I would expect you to say as far as how do you get started and how do you like you said, the legal requirement that all those organization needs to have in order to be able to sell crypto assets over the counter. So yeah, definitely I agree with you. And one last thing I'd like to know actually. So in regard to if somebody wants to actually go into business into it, how do you go about it?
Business, well, that's what I do. I advise companies as to whether they can provide services in respect of digital assets in different jurisdictions. So I look for any regulatory framework that will allow or disallow the provision of such services. So that's daily. Well, that's what I do for the business. So depending on whether the company is based in Switzerland, they want to provide services for people residing in the UK or people residing in Africa, or vice versa. You can be based in Africa and wanting to provide services to clients based in Europe. So that's the job of that's the mission of a lawyer, to look for the rules in place in the different jurisdiction that enables the provision of such services.
All right, okay. And do you look at the social media aspect of it, or the GDPR aspect of it, or any of those things?
Well, yes and no. It depends. It depends on the kind of services you're providing. If you are an exchange, then yes, you collect data at some point from your users. So yes, there is a data protection aspect of
Right.
cryptocurrency. But then the purpose of cryptocurrency was to be essentially anonymized in the same way that buying and selling on the stock market was anonymized. It was really a copy of what existed at the time cryptocurrency was created. So the issue as to privacy and data protection is a very important one, because you do have cryptocurrency that have been created just for the purpose of being totally private, and so you have to be very careful of those ones, because they have an ultimate motive behind privacy, which is which motive is different from the motive of Satoshi for the Bitcoin. Really, with regards of the Bitcoin, it was really to copy what existed on the stock market, on the financial market at the time. New cryptocurrency that really seek to be fully private and anonymized have different motives.
Okay.
So yes, there is an aspect of data protection and privacy, but you have to strike the right balance between what's doable, really doable, and the protection of the public interest.
Okay.
So that we really are at this crossroad, I think, with regards to cryptocurrency and data protection and privacy, because how can you require to collect this amount of data, process it, anonymize it, but still have to still be able to lift the anonymity for the sake of justice, for instance, if you want,
or auditing, or simply auditing sometimes.
Yes. So it's a very interesting question, and who should pay the price? Because there is always money involved in this. So who should pay the price for doing the collection and the work as in respect of data protection? And should we require the creator of cryptocurrency, new cryptocurrency, to collect the data of purchaser, of investors? Should it be at the point of creation, or should we require to leave anonymity when it is exchanged, or when it is sold, or when it is stored? Who should do it eventually? And no one is answering the question. First, they're pointing fingers right now at exchanges, but I think crypto exchanges, they are responsible in some way because they don't want to enable money laundering on that platform. So that's one thing. But then you have the creator of cryptocurrency. Some may argue that they should have the responsibility to collect the identity of whoever purchases their digital assets. So really, it's an interesting question. But then if you go down the road, then the same question is asked in matter of corporate law. When you have multiple shareholders in the company, do you know exactly who is the shareholder of this company? When you buy stock on the stock exchange, do you keep an account, a clear account on this? So really, there will be a question as to cryptocurrency industry environment should mirror what already exists, and we find the right balance, because the objective of cryptocurrency was not to mirror this environment. So it's going to be an interesting debate in the next decade, I think.
Don't worry, I've already solved the debate, and it's very simple. It's what they're trying to do. There is a new world and then there's the old world, right? And the old world wants you to use the rule of the old world to run the new world. And it's not going to happen that way. It's never going to happen that way. We know already. I know already the end of the movie. I can tell you that the old world wins. Sorry, the new world wins and the old world lose. So that's what's going to happen. It's just going to take time, right? It's just going to take a little bit of time for people to realize that, we have a 21st century problem. Maybe we should use a 21st century solution to solve the 21st century problem. But if you use a 20th century solution to solve the 21st century problem, you're going to have a problem. It's just never going to work. Never, ever. Because I know they're talking about it right now in the American Congress. I know there is the story about the Warner Amendment, and they want to decide whether people are brokers or not brokers. They're trying to muddy the water, make it extremely complex, and actually shut down the ecosystem because it's going to reach out to the open source blockchain developers and coders, and which is not what you want. You want those people to be free, because if they're not free, then they can't give their time for free or next to free anyway, a lot of the time. So no, we need those people. That's another debate, but I hope we're going to be able to solve it one day by using 21st century solution, right? To 21st century problems. All right, but thank you very much. One last thing from you. We need to know, where can we find your book and so on and so forth, right? And is it going to be a follow-up to that book, by the way, as well? That would be the next question, please.
Is there going to be, sorry?
So first question is, where can we find your book, And then second question is there going to be a follow-up to that first book?
Okay, so you can find my book on Amazon.
Okay, Amazon.
So the title of the book is Why Everybody Who Loves Africa Must Believe in Cryptocurrency. Mm-hmm. So you find it on Kindle format and paperback format, and there should be a follow-up.
Okay, there should be a follow-up. All right, so there is a follow-up coming up. Great. Okay, fantastic. Well, thank you very much again. Thank you again for your time. It was a pleasure talking to you. I hope one day we'll get to drink coffee or something in real world and talk about further about all these things. Because obviously I'm a social media specialist, of course, and I'm a data analytics specialist. And so I'm very good at data mining and of course, and all these regulatory aspects. But from the technological point of view, right? You covered at the low basis. I don't do that. I do the technological aspect of it. So yeah, hopefully we'll talk and see how we can collaborate one day. I hope so. All right, but thank you very much again for your time, and I wish you a very good night.
Thank you very much.
Okay,
Have a
then.
great day.
All right, bye-bye. Thank you again. Bye.
HTTPS twice www.fastercapital.com FASTERCAPITAL.com. So, if you're looking for raising capital opportunities, they made it easy for you. Yes, Faster Capital has the plan for you. They help businesses in getting funded from a huge global network of more than 50,000 angel investors, and with VCs organized according to industrial and geographical interests. They help you find and connect your business with angel investors and venture capitals worldwide. Whether you're looking to raise 1 million or 100 million, they will help you find investors and VCs that are interested in investing in your project, and they will facilitate the introduction. Right? So it doesn't matter how much money you need to raise for your startup, they will help you fund your startup and raise money in small amounts or on larger scales. Okay? They also advise startups on how to pitch to angel investors, venture capital firms, accelerators and incubators, which will help you in raising funds for your startup more successfully. They review all the necessary documents, of course, pitch deck, business plan, and financial forecast. They will help you in preparing a professional pitch deck, business plan, and other raising capital document, key raising capital document. They will also recommend and advise on the valuation, of course, of your company and how to prepare the right plan to fund your startup successfully. They offer expert feedback when it comes to equity dilution, startup evaluation, and share issuing. So this is Faster Capital, right? Please don't miss out. It's https://www.fastercapital.com FASTERCAPITAL.com. Have a look at what they do. They are simply awesome. All right. Now, let's start with proof of community. We'll delve later on a different podcast for proof of culture. First of all, how do you prove it? You look for proof of digital inception, a set of digital processes enabling the fast spread of a message or a concept in order to impact reality or a community and measure it via analytics. At the beginning was the blog, and then came social media. Pose. We've talked about the necessity of the echo chambers. The echo chambers are places where you have online communities that tends to, let's say, see the world or a problem, if you want, from the same perspective or the same point of view, and kind of repeat to each other, if you want, almost a mantra or the words of, or if you want, the vision, if you want, to some extent. All right, they keep repeating the vision in order to make sure that everybody understands that vision deeply. So that's that's proof of community. That's very important, of course. Those chambers will be full of electronic maximalist posers and digital posers and digital evangelists. We also talked about the necessity to understand the info of the 21st century. That was all in the last podcast. We also mentioned the fact that actually the Bitcoin and crypto ecosystem at large was actually appropriately set up for the info of the 21st century. All right, thanks to all those elements. So let's face it, most of the Bitcoin ecosystem was built organically without a grand master plan for a digital inception, due to the decentralized nature of the blockchain technology in the first place. All right, is it a tale of the technology leading the human? Probably, but nevertheless, the organic digital communities built from the early days of the Bitcoin inception around 2009, as per the Satoshi protocol, built in subterranean or underground and hidden digital communities, not willing to be known at first, and let's say geek chat rooms on Twitter, Facebook, Telegram, Signal, still had purpose, guideline, rule, aim, objective, organization in order to further the blockchain and Bitcoin agenda. When we look at the crypto space, we go deeper than just building online community. We're looking at building online smart communities where the member of that community end up actually being the actors at some point of that community, right? And let's call it the next level of the inception, okay? Which is when one of your digital influencer, ambassador, or crypto whore, cyber hornet becomes almost as important as you, the originator of the ecosystem. Let's have a look at, Q Vitalik Buterin, thank you very much, and the hyper-creative Ethereum ecosystem, followed by its DeFi multiverse and infosystem. Vitalik used to work on the Bitcoin project before going out and creating the Ethereum. Perfect example of an online smart community. Now, of course, you can look at Vitalik Buterin rise and the rise of the Ethereum ecosystem from the perspective of a technological revolution. As we know, revolutions have a tendency to eat their own children and can sometimes run into useless bloodbath and arguments. But it is also an important proof of culture element too. Strong cultures often end up being divided between 2 or 3 unapologetic camps that will never ever break bread again, so to speak. There is a core belief on one side and there is another core belief on the other side of the argument, which becomes almost a digital red line, never to be crossed by a member of each camp. But it does also foster a competitive spirit necessary for heightened innovation and problem-solving solution. Fast one and competitive one, of course, for the market. Hashtag change the world. Digital disagreements cannot always be seen as negative per se. They are often matched with phenomena of extreme creativity, involving multiple layers of innovation, several languages, multiple digital communities, multiple codes and protocols that sometimes yield necessary innovation, but often can end up in destruction of the entire ecosystem too. It is a fine line that all the shareholders and stakeholders of the space are walking over there. The perpetual line stepper could be punished, unfortunately. The Bitcoin maximalist versus DeFi internal digital beef, which is different of the beef between the DeFi or decentralized finance and CeFi centralized finance, could almost remind you of the camp in Christianity or Islam or NBA basketball versus FIBA basketball or even rock and roll, or dare I say coupe décalé in Ivory Coast, or the East Coast West Coast beef of 1990s hip hop. to mumble rap versus real bar spitting rap? Well, guys, ladies, Tupac died and Biggie too, by the way, at the end of the 20th century. So it was a draw, folks. Nobody won, and a lot of energy was lost in the wrong places. Better use of that energy should be geared towards maintaining that state of unbound creativity, going from renaissance to keep up with human beings' change, evolution in their needs and wants. But also look after the deployment of blockchain technology in other areas of our lives: healthcare, science, insurance, copyrights, legal deeds, and training the crew that will be in charge of these deployments better. Best training available. Okay, you can always find us on online social media, whether it is Twitter at Team ADMP, TEAADMP, or indeed on Instagram, again on at Team ADMP. We do have our own newsletter on Substack, hashtag ADMP Incubator, to stay in tune with the space and its many innovation global. And that's https:// ADMP Incubator, ADMPINCUBATOR.substack.com, Substack substack.com. And please do not forget our website, which is in need of a bit of work, I agree, but you still have very, very, very important information that is being displayed on there, which is www.admpawards.biz. I'm spelling it now, ADMPAWARDS.biz. What can I say? It is a work of timeless greatness in impeccable form for this podcast. Yep, fine words. Keep spreading knowledge, keep showing passion, and let the crypto kids play. Have a nice day, have a nice week, have a nice month, have a nice life. This was Satoshi's Corner, Season 1, Episode 11. We'll see you again in Season 2.
My name is Herman Jumesi, social media, blockchain, and big data consultant. This podcast is a bite-sized summary of a potential conversation with Satoshi Nakamoto seminal white paper, Bitcoin, a peer-to-peer electronic cash system. The goal of this podcast is to establish the many sources and resources necessary to create, deploy, and optimize blockchain technology ecosystem in order to establish a Bitcoin or blockchain standard for businesses and organizations in the 21st century.